Hey, Jason. How's it going there, Jason? How are things with you today? Jason, is it cold enough for you?
Well, I tell you, typical Alberta blue sky weather, Russ. It's about minus 28 degrees, about a 60 kilometer an hour wind. I was actually out this morning doing some closings for some clients from actually out your way in a little bit warmer clients or climate, I should say. But it's cold, and it keeps coming. I think reprieve is in the next week sometime, but I heard that a week ago almost. So we're taking it day by day.
Yeah. So Jay, I know we're going to date this a little bit, but it is right. We're right in the middle of February, and there's a cold snap coming through in Alberta, and out here in BC, we're actually having a cold snap too. Jay, we actually hit -2. I'm sorry to say, it is the pain is real. I feel your pain, my brother.
Well, I tell you, the first day we get -2 in Alberta, you're probably going to see some swimsuits walking up and down the sidewalks, right? It's going to literally feel like summertime, I'm sure.
Jay, you're now just talking about you in swimsuits in the same vein, or so. So thank you for that image, by the way.
There you go.
All right, guys. So welcome back. We're going to try something a little bit different here. I honestly don't know how this is going to go, and I'm usually a pretty stickler that I usually have to know everything, how this is going to flow and everything like that. But you know what Jay and I have made a commitment to do is to pick one day a week, and we're just going to get on a camera and we're just going to shoot some content. And what we're going to do here today, as I'm going to set the context, is we're going to take 3 topics, essentially 3 questions, and we are just going to offer some guidance and some coaching for anybody who wants to listen to this. And today is going to be a little bit more what I would call maybe a little bit more on the getting started side of things. But guys, here's something really cool. You have 2 people here with, better part of 200 plus transactions, multi-million dollars of transactions we've done, 40 years of experience, give or take, between the 2 of us. And we're going to share with you some insights on some getting started topics and then also some deeper topics. And we're just going to go back and forth, and we're just going to hash out a couple topics. Are you game for that, Jay?
Yeah, sounds good. Yep. You haven't enlightened me on the topics yet, so you know what? Let's roll with it.
Oh, well, so you're telling me I'm not prepared? Is that what you're saying, Jay? I just heard that very clearly.
I'm saying I might not be prepared. Yeah, I'm sure you're very prepared, but you know what? It's going to be, as always, based on experience, and I think just the real deal, right? It's we've always said we're in a different position. It's not about us. We can really help people. Or if we can help people save some of those lumps that we took, Russ.
Yeah.
And I know I took some lumps. I know you took some lumps, but it's made us who we are today, right? It's all good.
Absolutely. Okay, so for this first one, Jay, I'm going to go first. I'm going to let the question in. Now, I'm going to call this one, I'm not going to call it a softball question for you, but this will actually be a very difficult question for you because, you are a realtor and you've been a realtor for pretty well your entire real estate investing career. The first question I'm going to ask is, what are some tips and some strategies for real estate investors to find a good real estate agent or a realtor? Okay. I'm going to dive in first, and then we'll banter this back and forth. Now, some of you might be you guys go, well, geez, what a softball question to ask of a realtor and stuff but this could be Jason, you're going to put your hat on as a real estate investor looking for a good realtor or a real estate agent. First of all, first question, I'm going to just ask you this, Jay. What's the difference between an agent and a realtor? What is the difference when people use those terms interchangeably?
Nothing really. A real estate agent and a realtor is a licensed individual, licensed to trade in real estate.
Yeah.
We used to be called real estate agents years ago, and then they've coined the term now associates. Real estate agent, realtor. To me, it's kind of all the same file, right?
Okay.
We're trading in real estate.
Yeah. So it's realtor. It's not realtor.
Not a realtor. Yeah, we hear that lots, and you know what? At the end of the day, it's okay. My own parents call me that, so it's and I'm not going to correct anyone. It's all good.
Yeah, it doesn't matter what you call it, as long as you call them Jay.
That's right. That's right.
Yeah, it's about the relationship. Okay, so I'm going to go first. I'm going to say a tip to find a good real estate agent is one that has to be enthusiastic to work with real estate investors. Now, hear me out for a second. Not all real estate agents have an appetite to work with real estate investors. It's a very unique, it's a unicorn. It's a rare breed of some real estate agents that like to work with investors. As a matter of fact, some agents absolutely, when you come in the door and you say, I'm an investor, they just say, okay, down the street is where you want to go talk to that person down there. So the first thing I would say is the real estate agent needs to be enthusiastic to want to work with investors. Your turn, brother.
Okay, I'll build off that. Yes, you have to be enthusiastic. This is I guess a craft, for lack of better terms, of being able to, handle a transaction for a real estate investor, because the transaction for a real estate investor versus someone moving into it is different. Not so much the transaction itself, Russ, of when we get to an offer and negotiation and back, that's very similar, but it's the lead up to it. It's the information that an investor needs versus someone that's moving into a home to live in it as a personal residence. And let's face it, real estate investors, it's all business. It's all about the numbers and, setting people up, for success for the long term.
Yeah. So I would say that they need to be an expert in essence. So enthusiastic, another word starts with E, is they need to probably an expert. They need to know what they're talking about when understanding the language of for a real estate investor, don't they?
Well, and that's on two sides of the fence. So understanding, the language for the investor, but there's one key ingredient here, Russ, that is going to make this work for a real estate investor, and that's called, a customer, or better known as the tenant. So the whole, the tenant market and the rental market and, the tenant profiles that live in these types of properties, you need to almost be an expert in that as well. You need to understand it, again, what our customer, our tenant, that's going to be paying us rent. And in some cases, $2,000 a month, they're giving you $24,000 a year. So you got to understand what these people want, in their homes, and understand their budget. And, I guess the family profile that lives within that. So
Yeah.
there's just so much more than, like I say, looking at a property and, but at the end of the day, I'll sum it up as this: it's the information of being able to find the information for an investor. So if I can circle back to your original question, how do you find that? I'll just throw some questions out there. Some, that if I was looking in a different market other than Edmonton for a realtor, I would ask them what they own. How many properties do you own? And what type of properties do you own? And I would ask, why do you own those types of properties?
Yeah.
I would ask what your tenants are, and is that the actual tenant profile that you tried to achieve when you bought the property, or is this you kind of bought the property and ended up with this tenant profile and have had to make that work? And then I guess on the economic side, the fundamental side is just understanding the overall housing market, the job market, and being involved with planning and development in municipalities of, transportation changes. What is the municipality planning for? Maybe any density changes and maybe any bylaws that will affect construction or parking or, being able to increase density in actual properties. These are living, breathing things that happen to us, in Edmonton here, have happened to us quite a bit.
Yeah.
In the last 24 months, all of the above.
So we're just throwing out some gold nuggets here, Jay. We've talked about, so everything's starting with the letter E. We're talking about that they have to be enthusiastic to work with investors. They have to be experts at working with investment grade property. And they also have to have the experience of wanting to work with investors. Now, I'm going to share with you guys a golden tip. And Jay, I'm actually, let's try this one on. I'm actually going to, this is one of what I call my golden question when I come and I ask a good agent to test them a little bit. And I'm going to try this on you, Jay, to see how you would do. Okay. So no pressure.
Okay.
Here's what it is. So I would come to you and say, Jay, I'm an investor. I'm looking to do this. After we've had a little bit of a conversation, you get to know me. We talk about the Rough Riders. We talk about the weather, talk about our families, get to understand. And I'm going to ask you a question is, Jay, what would be the best investment opportunity you have on your books right now and why? How would you answer that? Now, time out, guys. Before you answer that, Jay, what I just did was give you a powerful question to ask to see how this person's going to answer it, because you can tell very clearly if the person is a real estate investment expert by the way they kind of handle this question. So,
Okay.
Jay?
Well, great segue, Russ. Thank you. And that's a good stiff question. And I think, I would probably turn that around and comment and ask you a question right back, because the best deal is different for everybody. And if I can throw you maybe the best deal that I think is on the table right now, that might not be what you would consider a best deal. So I would turn around and ask you, what's more important to you as far as either cash flow or capital appreciation. I would also ask you, how much time do you have to take care of this investment, and try and understand, I guess, and line those two dots up with, the performance measures, your budget, and then make sure that that deal will fit into what you're trying to achieve and also fit into your lifestyle. Once I have those three answers, I can throw deals at you all day long. But until I have those three answers, I'm just going to be sending you, deals that you may or may not like. And let's face it, time is valuable. And I think as we're all getting a little bit older, the time becomes more valuable. So we want to work efficiently.
Yep.
And at the end of the day, it's about helping people get what they want. So if they're willing to share that, like I say, we can traditionally throw deals at them all day long.
Yeah. Wow. So guys, what Jay just demonstrated for you in real time, and we did not rehearse this in one way, shape, or form, although we do know each other and we do talk every day. What Jay just demonstrated for you is a real estate agent that cares about the relationship more than just doing a transaction, right? In essence, that's what you just did. Is you want to make sure you fit the right investment asset with the right person, not just transact another property. Because like you said, it was just golden that I could send you all this kind of stuff, but that would be my lenses and my filters of what I think is great. But it's not what you're looking for. If you're looking for your first home, or you're looking for, 192 unit apartment building, and I threw you the wrong opportunity, your first response for me would be, well, this guy just doesn't understand who I am, and he's out to lunch, right?
Yeah. Well, let me give you just a real quick example on that of two scenarios where this might apply. Is when I talk with real estate investors, daily, and sometimes several times a day, but if someone comes in, and here's two live examples. The first person comes in and they say, Jason, look at, we'd like to buy real estate where would like to move into the Edmonton marketplace. We've got this much capital I would like to, invest with, and we're taking it off a secured line of credit of our personal residence. We would like the ability for the property to be able to cover the interest cost on a secured line of credit if possible. And you know what? It'd even be great if we could even have some cash flow on top of that. Okay, great. Point taken. Now we need to find a property that is going to produce a little bit more cash flow. These people are going to hire a property manager. I had a call earlier this week with a gentleman from Toronto as well, that he said, look, I'd want zero headache. This is a long-term play for me. I'm in my early 30s right now. I've got a couple $100,000 that I'm looking to invest. It has to be completely hands-off with zero headache. I do not need the cash flow. I'm working. I make a good living. I'm after the long-term security of a real estate asset. Great. That just absolutely tells me right there the property class, or the property type, if you will, that will be most beneficial for these people. It'll also fit their budget, and it's going to fit their lifestyle, and it's going to be a real treat for them to own.
Yeah. Now, one of the reasons why this question came up that I wanted to address this is, and sometimes I have to take it maybe I'm taking it for granted on how lucky I've been right from the very beginning, on how I had an amazing realtor that provides me amazing properties right from day one. And it came out, I was having a conversation with this guy, and he was talking about, I'm struggling to find deals. I'm struggling to find properties. I'm struggling to this. I'm struggling to find this opportunity. And I said, well, why don't you just contact your realtor? That's their job, to go out and find you deals. And he goes, I have realtors and they don't come back with any deals. And I go, well, isn't that their job? And then I had to stop and go back and sit there, and I go, maybe I've taken it for granted that I've just been very lucky and blessed that I have an amazing realtor that just sends me deals, right? Like, for example, after we've gotten to know each other and you know what I like and you know the type of investment criteria I have, What's your response, Jay, usually when I come to you and I say, Jay, I'm ready to acquire another property, got some capital partners lined up, I'm ready to go. What's your response typically?
How much capital and how soon do you want it and how
Yeah.
many?
Yeah. How many and how soon?
Yeah.
Right. That's what I want to have as a response from my realtor. I want to have enthusiasm. I want to have as an expert. I want to know that he understands me. Right. So if we were really to just recap it, right, guys, again, they have to be enthusiastic to work with realtors or with investors. They have to be an expert at investment grade properties as well. Not somebody who's maybe done 1 or 2 or 5 or 10. Not that there's anything wrong, right? Somebody who's hungry is good too. They have to have experience, many years in the business to know the good, the bad, and the ugly about what's going on and what areas to avoid. Like when there's areas that wouldn't touch with the 10-foot pole. How do we know that? Because we've been in those areas and we understand the tenant profiles. And they have to understand, and most important, they have to understand your needs and want to build a relationship. Anything else we want to add to that question, Jay?
No, I think that's pretty good, Russ. I think at the end of the day, I've always said it's always about the relationship. And the way I look at it, and not saying other realtors don't, but it's my job is exactly that, to sit and listen and understand what you want and help you get it. And part of that is finding deals, and part of that is qualifying those deals. And a lot of that is actually getting the information that an investor needs for them to make an informed decision. I'm not the one making a decision, right? And like I say, if we can spend a little bit of time up front and understand what an investor is after, it really makes it easy for us to go and find that. And the closing note on that is just to make sure that it's going to fit long term, not only the tenant profile, but make sure the property fits. Because you've heard me say it 100 times, this is the fun, easy part of going out and looking at deals and the buying part. It's fun. It really is. It's fun, and it's exciting. But there's going to be a time in the near future where we're going to hand you or your property manager a set of keys, and that's where that experienced realtor I've known to look for, the separate entrances and the extra parking and making sure there's no fire hydrant in front for eliminating parking. Just little details like that are really going to shine through on one's financial statement long term. And this is stuff that you cannot see on a pro forma. It's easy to create a pro forma and punt it out there and say, here's the numbers on it. But quite frankly, there's a lot, maybe that you can't see at time of acquisition that we should still be looking at. Hey, Russ, I got a great question for you. And this is one that we probably hear a ton of times on this side, but you know what? I'm going to throw one back at the coach this time. So
are we calling the show the kid and the coach or something? Is that what we're calling?
Well, probably more like Mutt and Jeff, but let me lob a softball your way and see, and get your opinion on this, because I know a lot of people that are probably listening or watching, are sitting in this exact circumstance right now, wondering which course of action to take.
Yep.
So if you were to buy your very first property, what type of property would you buy? What property would you buy in general?
Okay, so let's put a quick premise on that question, is that it is the first property, right? So here's what I would actually suggest. I suggest, because we live in Canada, and I know there's going to be a worldwide audience that will watch this, I would highly encourage people to buy their first principal residence first. Because in Canada, we have this wonderful thing as a tax-free gain on the capital gains of our principal residence. I think you should buy your first house, the best house you can afford to live in, and go forward, and buy a principal residence. Now, here's the cool thing, and let's get into it. You and I are going to riff off this, and we actually have a real life case study that we're working with a young fellow on this right now. I think you can have your cake and eat it too, where you potentially could buy a principal residence house with a suite. If you were single, you could live in the suite and you could rent the upstairs out, and you could get into this principal residence for 5-10% down payment, CMHC insured mortgage. Banks love lending to homeowners at the same time. Part of the rent that's going to be generated from the upstairs will go towards the qualification, a little bit of your mortgage qualification. And then you could have both a rental property and a principal residence all at the same time. That would be my first recommendation, is you should look to buy your first principal residence first.
So, Russ, let's back up on that a little bit. You said the income from the upper suite qualifying or helping the person qualify for the mortgage. So, we're assuming that you're talking about a home with a secondary suite in it.
Correct.
And can you elaborate a little bit on the income portion that you're going to get and how that person can use that to help them qualify for that bigger, better property right up front?
Yeah. So each bank has a little bit of a different rule. And unfortunately, I'm not a mortgage broker. I don't know all of them, but I'll give some general terms. For example, I know some lenders will give 50% rental offset if you rent out, say, your upstairs. Say you live in the basement, and if you rent upstairs at, say, $1,800, you would get $900 that would credit towards your income qualification of that. So they would take all your job letters, all your other sources of income, whether you're getting down payment from mom and dad, all those kind of things, whether mom and dad is co-signing, and they would add $900 a month from the income from the upstairs, and that might actually tip you over the edge to be able to buy a house with a suite in it.
Absolutely. Now, even I guess another question that would probably come up on that I'll ask you is, we all know what a DCR is, a debt coverage ratio. If you are buying a personal residence, is a lender going to be looking at the DCR of the actual rental investment, or is this something that is going to be a what we would call a high ratio mortgage or CMHC insured mortgage, and that stuff could potentially all fly underneath the radar?
Well, bottom line is banks all have their individual rules. But here's the thing is when they look at you differently when you're saying, I'm buying it for my personal residence. In Canada, homeowners typically pay their mortgages, right? And it's one of the easiest mortgages for a mortgage broker to get. It's one of the most friendly because they know the default rate on a homeowner in Canada is next to zero, right? And you potentially could get into it for next to, for like I said, a 10% down payment or less in some cases, depending on your strength. Now, here's another thing, and and we'll get into this case study of this young fellow that we were both had conversations with, and he's probably getting really close to pulling the trigger in the next little while. We're not sure, but here's the thing that I also would challenge somebody: if you are looking to, if this is truly your first purchase, take a look at the home buyers program put out by. Is it CMHC, or it's either CMHC or CRA that puts it out? But if you Google home buyers program, which states that you can potentially take up to, I believe, $35,000 out of your RSP to be used as a down payment towards a principal residence, your first principal residence, right? The first time home buyer program. Okay. That could be potentially your down payment. Maybe you have some RSPs sitting there that you could pull out tax, without paying tax, use that as your down payment. Or here's the other thing that I shared with some people at the same time. I'm getting a little bit on the skinny branches here with the strategy, but follow me out with this. Is, let's say down payment is coming from mom and dad. Let's say that's where it's coming from. I think that's awesome. Maybe this is a way, if mom and dad is watching this, this is maybe a way of getting junior out of the house sooner rather than later. Maybe mom and dad deposited the $35,000 into the RSP. If you have the RSP room, then you can use that as the withdrawal against for your down payment. You get the instant tax refund of the $35,000, and then you can qualify for the first time home buyers program in Canada at the same time. So truly, you can eat your cake, have your cake and eat it too, if you will.
Yeah, absolutely. And I'll throw a name out there, Andrew. If you're watching or listening, we're talking about you now, and this is the live example. That we're talking about is a young fellow that has he doesn't have a family yet, so this is the prime example for him to be able to move into this type of circumstance, and he can live in a secondary suite, no problem. He doesn't need any more space than that. And in the live example of putting only 5% down payment, he can almost live for free in building number one. He's going to be short about $300 to $400 a month, but there's going to be, I guess the upside on that is after he would leave and maybe move into an additional property in the next year or two, that property, by renting both suites, even at 5% down, would be in a positive cash flow situation. Now, what this young gentleman's talking to doing is he's looking at buying two of them. and let's just use a side-by-side duplex building as an example, to where we've got 4 rental units up and down, and he's living in one side of them, and he's putting 5% on the first one and 20% down on the second one. And in the whole grand scheme of things in that one building, he's going to live for free and still be over $400 a month positive cash flow after expenses.
Wow.
After, if he would move on and turn that into a full-time rental product, he's still going to be over $800 a month positive cash flow. So, Russ, maybe there's some links in the, after the video that we can put in to maybe steer people into this program with CRA, or look into it with if you've got the ability, and you're a single person or a couple, to live in a lower secondary suite. Even if you were living in the main suite and renting out the secondary suite, it's still going to be beneficial, right?
Yep.
And after the fact, if this is, they move on and move into another property in a year or two as the family grows or whenever that time is, even at today's interest rates, and like I say, at the lower down payment, the property with the secondary suite will still be in a positive cash flow situation, even with that low down payment. And you know what? We're all real estate investors. If you look at the ROI, of course, anytime you're putting less money into it, the ROI goes through the roof.
Yeah. So I guess a succinct answer to your question is, what would be the first type of property you buy? I don't concern myself typically of the type. What I would actually concern myself more of, is there a possibility that I can live in it and rent part of it out if it's my first home, and help offset all my costs? So essentially, I guess that's a fancy way. People are talking about house hacking and all that kind of stuff. Essentially, that's the way I bought my first rental property. Now, I'm going to contradict my advice here. That's how I bought my first personal residence. I'm going to contradict my advice. I bought 10 rental properties before I bought my first principal residence. Now, if I was to look at it again, I probably should have bought that first principal residence first. That's the advice I would give myself, 20 years ago. And what I did was I found somebody who was a contractor, owned a painting company, had all the trades. We found a house in Coquitlam. It had a basement suite in it and had a spot for a second basement suite that could be put into it. Okay. So we bought the place. I qualified as a first-time home buyer, right? So I took money from my RSPs out as a first-time home buyer. I think we got in with 5% down, the two of us together. The other partner did all the work. Right? They did all that work. They put in the second suite. They used all their trades. They used all their people. And after we were done, we essentially lived upstairs, and we had 2 suites in the basement, and we were living for under $300 a month is what our costs were to own that place. We bought the place for, I'm probably going to stretch myself in the numbers here a bit. Well, we bought the place for $360 after we put in, I think we put in 40 into it. So we're into it for $400. When I exited out at 7 and change. And I know my partner who bought me out exited out at 1.4 million. So, oops. Probably should have found a way to hang on to that a little longer, AJ.
Well, I was
but here's the point. Here's the thing I'm trying to get to, guys. I got into that with like a 5% down payment, pulled from my RSPs as a first-time home buyer. I only paid $300 a month in rent, and I doubled my investment within like 3 or 4 years. And the reason why I moved out is because I fell in love with an amazing woman, and we decided to go get our own place. And she didn't want to move in with a roommate for some reason, Jay.
Go figure, yeah. Go figure. So listen, Russ, I guess just to clarify on that for people listening and watching, the personal residence that you bought was a personal residence the financing was structured as a personal residence.
100%.
But if I'm reading between the lines, you have, had, I guess, the intent of having secondary income from that, from an additional suite, and knew this was a transition for you, that you would be moving, in a year or 2 or 3 or 4, whatever that timeline was. And then that property was going to become an investment property for you.
100%. That was my intention. Right.
Yeah. Because I think, just to clarify the question of buying a personal residence, if you're going out and buying a personal residence without a secondary suite or that income stream, I think I would probably have to maybe, fire back at you a little bit, because I know just from experience that if people are buying a personal residence, and say it's their dream home before investment, that can hamper their mortgageability. And people ask that all the time too, and we see people doing that. People need to live in a house. However, the fact that you bought 10 investment properties first before buying your personal residence in today's lending environment would probably be advantage investor. But I think the strategy that we're trying to bring forth today is that if you have the ability to take advantage of the financing structure of a personal residence with a secondary suite, this is where we're targeting.
Yeah. Now 100% times were a little different back then, and we're going to go back into the way back time machine here a little bit. The reason why on my 11th property, I decided to get a principal residence, because my mortgage broker at the time was taking a look at my portfolio review and said, Russ, I think it's time to buy a personal residence, because banks like people with personal residence better than renters of basement suites at the time. And I said, makes sense. So can I still qualify for a first-time home buyer even though I've bought 10 places? And he said, yeah, have you lived in anything? Have you deemed any of them as a personal residence? And I said, nope. Okay, there you go. And I qualified for a first-time home buyer at that time. Now, don't get me wrong. Like guys are saying, well, maybe you're skirting the issue here. You had an intention as a revenue property. I lived in it. I lived in it for almost 3 years. So I moved in. We're not talking about you just buying a personal residence. I put my sleeping bag in it, and then I'm going to the next day, I'm going to move out and rent out everything. Guys, do it above board here, please. If you say it's going to be your principal residence, do move in. But I think there's a wonderful opportunity for somebody maybe getting started, maybe young, single. Jay talked about buying one of those side-by-sides with suites. Essentially, you got 4 rental units. You live in one, rent the other 3 out. You're not only getting positive cash flow, you're living for free. I think that's an absolute no-brainer. And guys, if you are in that boat and you're young and you're buying your first place, you may be making a presentation to mom and dad, maybe to help you qualify, or maybe come up with some down payment. Maybe you're making a joint venture presentation to mom and dad to help you be able to do this kind of a transaction. All right, Jay. So final question here for you today, in the kid and the coach show here, if you will. So we need to bring this out into a live broadcast. Maybe, and I'm being tongue in cheek when I'm saying this, because we are recording this one. I have an intention that I would love to have this as a weekly live broadcast, and we're just going to talk some topics, and it's just going to be the coach and the kid, if you will, just riffing on some real estate. All right, Jay, one more question that I want to dive into here today. So we're going to have to go into the way back time machine here. Woo, the way back time machine. I've got hair. You have a few more follicles on your head too.
Barely.
Yeah, barely. There's a few less gray hairs in the beard, and it's still 2021, but you and I are both just getting started today. Like we're just getting involved in real estate investing today. And I'm going to jump in and answer a few of these myself and give you some advice as well. But what advice would you give to somebody starting in 2021 if you're just getting out into the real estate market right now?
Wow. Okay. So just to be clear, if someone is really looking to start their investment career today, what advice would I give? I would probably jump right to know your end game, where you want to end up. And I think I asked that for those of you listening and watching that have had a chance to connect with me. I always ask where real estate fits. Is it part of a long-term wealth plan? Is it part of a retirement plan? Is it, get rich quick? What are you trying to do with it, and where does it fit in your life? Because the properties that you're going to look at and the property types that are available will all contribute differently to those equations, I guess. And I think the advice that I would give is, and you don't even need to understand the properties and the property types. I think that's our job, to bring that clarity to you. But I didn't do that, Russ. And I guess just talking on a personal experience a little bit, I got caught up in the hype. I mean, back in the day, we attended seminars and weekend events, and I got caught up in the hype of real estate investment itself, because it's easy, it's exciting, it's fun. And, I bought a lot of my first properties off of a sheet of paper, off of pro forma. And, not saying that that's not a viable step to look at, but, the experience was good for the first little bit, but where, I ended up getting caught was a year or two or three down the road when there was, hidden expenses, with furnace costs and renovation costs, or that I bought some properties with tenants in them. And when they left, the tenants left me with a mess and I needed a $10,000 or $12,000 renovation bill. But at the end of the day, if you've got the stomach for that and it's part of your long-term plan, that's great. If that's the property type you are looking at, we just need to make sure that up front and allocate maybe for those costs or understand what those potential costs might be. Because if it's part of a retirement plan, I think, you want to come in with your 20% down and keep as clean to that as you can, and not be in a situation where you have to contribute any more capital unless it's going towards mortgage principal reduction or buying further assets. So answer the question, that's where I would understand your end game first.
Yep. And I'm going to build off of that. As a matter of fact, that's why I took the time to build out an entire 5-part training series. It's on my podcast. It's also on the YouTube. So probably wherever you're watching or listening to this, you'll be able to find that. Is what's the end game? But let's put it into a plan. Like, let's put it into a pragmatic 15-year believable plan. Like, how many properties will you need? What kind of retirement income are you looking to do? And I built out a plan for people, which this is actually, I built it off of a plan that you and I have talked about for I don't know how many years. I just put it into a pretty PowerPoint presentation. And it's one of those ones that I wish somebody would have shared with me 15, 20 years ago. Things would be a lot different. But what it does is it breaks out a plan on how you can make a $1.8 million real estate asset base, and you can generate $93,000 a year over a 15-year time frame. Now, there's lots of variables, and I'm not going to, it's literally an hour case study that I walk people through. So if you guys are interested in that, by all means, check out a link around here where you can get that information. Okay, so first step would be have a plan. Okay, the next thing I'm going to dive into here is, and this is going to be very ironic, the point I'm going to make here, meaning that this is going to be on YouTube and it's going to be on podcast. So here's the irony of it is, stop watching YouTube videos and stop listening to podcasts that are so shotgun approach that it just doesn't do you any service. Meaning, I understand education and I understand learning and I understand being exposed to different investment opportunities. But if you're just getting started, to learn on a podcast of how somebody's buying a mobile home park, or how they're doing land development, or how somebody is buying a 50-unit apartment building, or how somebody is building out their team and growing and scaling, probably won't do you any service. And how I know this is I have conversations all the time with people that are just getting started, and they're almost more confused now than ever before. They truly are. And then what I do is I just ground them in. I go, what's the next step? Like, what is the first step you want to take? The first step you want to take is maybe it's, buying that first principal residence. Okay, let's reverse engineer a plan and how you do that. Okay, so here's the point. Educate yourself, but understand that you educate yourself with a purpose and get laser beam focused on the action, and understand that a lot of the YouTube and podcast is entertainment. It's not education.
Well, I think on that note, Russ, you have to be laser focused in this approach, because in the real estate investing world, there's so much gray noise, there's so much traffic and so many opinions that I think one can easily get caught chasing shiny things, if you will, and veering off track. If you've got your target and you know what your end game is, listen, no one should be able to tell you any different. If you know what you're trying to achieve in a 5 and a 10 and a 15-year period, just stay laser focused on that and make sure you achieve that, and don't lose sight of that. But I think I also wanted to just maybe add to what you had mentioned, Russ, of not only keeping laser focused, but don't try and start today and compare yourself to people that are buying, 85-unit apartment block, or, land development, or as you will. Just going back to your example and referring back to your plan of a $1.8 million asset-based retirement plan, how many properties do you need to buy to accommodate that approximately?
Yeah.
And let's get this in perspective, because people, it's not this great big pie in the sky plan. This is actually a real achievable plan that really anyone can start and complete. But how many properties does it involve?
Yeah. Well, it involves eventually having 3 free and clear places. That's the case study I shared in that. Essentially, it would be 3 suited houses, free and clear. So essentially 6 rental units that were free and clear over a course of time, which means you had to probably buy 9 properties over a 5-year time frame to then manage them, start paying them down, and then eventually sell off 6 to have 3 free and clear. And over a 15-year time frame with 3 free and clear properties, they will be valued approximately 1.8 million and generate about $92,000 a year income for you.
Right. And free and clear title, again, the number of assets.
That's almost a swear word, isn't it? Free and clear. Everybody, it's like everybody is
leverage.
Well, everybody's refi till you die. And that's the lesson that I teach people eventually too, is guys, eventually this borrowed money has to be paid back, right? It does. So what's the plan to pay it back? Okay.
Yeah.
So,
Yeah.
I didn't mean to jump over there, Jay.
No, that's another great point. That's just a whole nother segment of, understanding that end goal. And, it's in a lot of cases really easy. And let's face it, I mean, life circumstances change for each of us. They're different for each of us. And, when you go through a market situation like what our, Vancouver friends and our Toronto friends listening to this right now, where you've seen such massive amounts of capital appreciation over the last 5, 6, 7, 8 years, and you're sitting on $500,000, $700,000 worth of equity, it's probably pretty easy to think, hey, how can I access this? And, but I guess the point is, Russ, is that, if you're going to access it, put it to good use, right? Yep. And if you're not, make sure you understand how you're going to pay that back.
Yeah. Another point I'm going to say is, I'm going to jump in with the point here. If starting in 2021, be prepared to build out a team of people. You can't do it all yourself. One of the most important people up front that I would tell that you need to do is you need to get in front of a good qualified mortgage broker to find out where you stand financially, if you can qualify for mortgages, yes or no. That is a fundamental first step that you need to take. Is, I'm not saying go and make a full-blown application, but just find out where you stand. And most qualified mortgage brokers with maybe just a few numbers and a few metrics and maybe a questionnaire can probably tell if you have a chance of qualifying for a mortgage, or do you need help, or do you just, things are just that dire that you have to go a completely different direction. But I think knowing where you stand financially is a fantastic first step.
Well, on just to clarify that, Russ, and build off that, you can easily fill out an application with a mortgage broker that can give you parameters, but please just make sure you're as truthful as possible on that application, because if you take that information and you maybe bend it a little bit to make the application look good, when you get to an actual, formal financing application with an offer to purchase, your mortgage broker, the lender, is going to circle back. And guess what? They're going to want to verify all that information that you told them on that application. So if your income's off, if you're asset based, I think you're always better off to maybe fly in a little bit conservative on those applications. And like I say, the mortgage expert should be able to give you your parameters, of what you can qualify for and how many. And really, you can take that to the next step and start looking at real opportunities that'll fit that mold.
Absolutely. What would be another tip you would offer, Jay, if somebody is just getting started in 2021?
Well, I think we talked about understanding your end game and keeping focused with it. I think another real good tip is and kind of building off that with the team is circling yourself with. I'm going to say this, and it might not sound politically correct, but avoid the vultures. Find yourself and surround yourself with good people that, I think will, legitimately help you get what you want. And you got to understand, and Russ, you said it earlier, is that it's really, really hard to do this yourself, especially if you're living long distance. However, there are people out there in this world, that can really help you on the ground on this side. If Edmonton is your market, or regardless of where your market is, surround yourself with good people. And I think the easy way to do that, and one thing that I always offer to any new customer coming in is, you know what? Do you want some names and numbers to talk to people that have, used our services, and talk to them, hear it from them, don't hear it from me. And just talk with other people that have gone through the experience. Because I think, you know what, it's a hard world out there right now. And, if there's people that, are, chasing the transaction, I guess, so to speak, for a paycheck, I don't think that's entirely right. Not in this business. If I've always come at it from the other way, where if you just really bang it out of the park, there's many times, let's face it, we're dealing with real estate investors. Most people come and buy one, then they want another one, and they want another. If they come and have a crummy experience with you off the hop, or realize that you didn't have their intentions first place, you're never going to see these people again. And they're probably not going to talk well about you. However, by doing the opposite, I think is just, makes for great long-term profitable relationships all the way around.
Yeah, absolutely. I 100% agree to that one. I'm going to build on that a little bit, and then I'm going to add another tip here as well. And then, Jay, if you want to add one more, we can do that at the end too. So here's what I'm going to do is, this game of real estate is relationships. It truly is. You will meet some lifelong friends. You will meet some people that you probably don't ever want to deal with ever again. It's how you show up in the transaction, and who you become in the process is more than important than the amount of money you make, or the doors you acquire, or any of the other kind of stuff. Your reputation and who you show up is it's capital for you, and it can be gone in a heartbeat. So just be very mindful about your relationships. And my real estate relationships are worth more to me than any individual asset that I own. I love some of my houses. Some of them I hope nobody's listening. I wish they would burn down. but I my treasured assets are the people in my database and the people on my phone that I can pick up if I'm having pick up my phone, and if I'm having trouble, and I can reach out to a good friend, and I just have an amazing relationship with people. That is the true asset that you're investing in, and that you have, is your relationships. All right. I'm going to offer one more tip before we go. And if you have another one, Jay, we can add it in, or we can, potentially wrap it up if you want. Here's a big mistake that I made, and I wish I had learned this one a while ago, is tenant profile matters, and understanding who you're renting to, understanding who your customer is vitally important to having a successful real estate investor. Now, take it another step forward, and I know we've shot a video on this. It's called The 3 Pillars of Real Estate. Understand your tenant profile. Match that tenant profile that you want to work with the right house in the right neighborhood, and you stand a better chance of having an incredible ownership experience as a real estate investor. Now, how did I make some of these mistakes? I bought cheap properties based upon pro formas that looked great on paper. I had no consideration for the tenant profile. And lo and behold, I embarrassing to say that I've been contacted multiple times by police that there was gunfire in some of my properties. Right. So I had no consideration for the tenant profile. And if you take it the next step, so all I'm trying to say, guys, is...
And vice versa, Russ.
Yeah.
And vice versa. The tenant profile had no consideration for you as the owner either.
Absolutely. So just give a consideration to who the customer is, and very few people actually will do that work. Now, it's funny. I was just on a Facebook group today, and people were talking about having a bad tenant experience, and how do I not have a bad tenant experience? And my advice to them is, start with the customer and the tenant in mind. Match that customer with the right property in the right area, and you stand a greater chance of having fewer issues. You truly do. You want to expand on that, Jay?
Well, I think it's like any business process. It's a repeatable process. So if you don't understand who your customer is up front, and you don't buy a property in a location that those people will want to rent, you're going to be, trying to jam a square peg in a round hole every time you have a vacancy if you're not aware of that up front. And like I say, if it does happen and you're buying and you have a specific profile that you want to attract and you design it that way from the start, if you have a tenant turnover and when you have a tenant turnover, you're going to be able to attract that same type of person back in.
No.
And ultimately, that's how I look at it is, who do I want to do business with long term and have a personal relationship with? And quite frankly, there's tenants that you mentioned, Russ, we don't even want to be these people's friend, let alone have a business or a landlord relationship with them. So just be very mindful of that. Right?
Yeah, and treat it, and you hit the nail on the head with using that word that starts with the B, is treat it like a business, not a hobby. Honest to goodness, guys, if you actually just look at it a little bit more, like each one of these houses is a business in a box, right? And you have to have marketing, you have to have sales, you have to have financing, you have to have the accounting, you have to have all those kind of things, and you treat each one of those assets like a business in a box. You would probably have a better experience if you just gave some consideration to who your customer is and how do you attract that right customer profile. Jay, anything further from you?
Yeah, Russ, good segue. You mentioned the word who, and I think that's a very powerful message just to maybe end off on here is, I think when you're beginning in an investment career, and I think it's a good thing to understand it all. I think you need to understand it all. However, I think throughout that process, you need to understand what you specifically are good at and how you contribute to it. And as the investor, there's a lot of investors that come through our doors, Russ, that are business owners or doctors or lawyers or professionals. They make great income. They are making great income. They do not need a secondary job. So I guess where I'm going with that is that, understand where you fit. And, sometimes it's not how, it's who. And this is where you're circling back and just surrounding yourself around who's that can help you get what you want and good who's. And, when you have a relationship with people, it's always a two-way street. It's give and take. And I think when you're building your team and you're reaching out to those individuals, understand where everyone fits. And I think if you can manage those relationships and everyone understands what you're trying to achieve, you're going to be successful. It's just to kick it into gear and pull the trigger and make that start is going to be the next biggest challenge.
No, right? I hear you. Well, I think that might be a good place to leave off today's conversation. I heard a little beep in the background of your computer, Jay. It's probably your next appointment going to be coming up here as well.
Overdue by 8 minutes.
Yeah. So guys, wherever you're watching or listening to this, please leave some feedback. If there's some things that you want us to dive into a little bit deeper, I know we talked a bit about some getting started topics here in this thing. If you want some deeper dives into a few things, by all means, let us know. We're here to serve. We're here to make a commitment to keep doing these kind of things. And we're just maybe in our old age getting maybe a little more efficient with our time. So Jay, any final words from you before we sign off here today?
I think, Russ, that's a great request, is that if anyone watching or listening, just has questions, it's just information again, people, right? And I think with the experience that I've gone through, that Russ has gone through, we are certainly more than willing to offer an opinion on that, good, bad, or ugly. And like I said, it's just information. If it's information that you can take and put it to good use and it'll help you, that's what this is all about.
Yeah. So if we can really categorize that, your advice is the good, mine's the bad and the ugly. If we can really put that.
Well, let's let the listeners determine that.
All right, guys. On that note, you have yourself a wonderful day. Talk to you soon. Bye for now. Hey, I sure hope you enjoyed this video. If you are interested in moving forward with velocity, if you're interested in being a successful real estate investor, only 2 simple next steps from here. Number 1, below where you're watching this, there will be an opportunity for you to subscribe. And over here will be a hand-selected video for you to keep moving forward. Continue your journey forward. Just click on over here for that hand-selected video for you, and we'll see you on the other side. Thank you very much.